Welcome to Monetary Therapy with Elio, Harmon.
And Travis Kendall.
We're here with episode 9, where we're going to talk about how to save money. All right, Monetary Therapy with Elio and...
Travis, it's a sunny day today.
It is, kind of. They can't tell.
Well, that's why you got to tell them.
Do you think they'll believe us? What if it was storming outside right now? We just said it was a sunny day. Could they tell?
Well, let's all just be happy, okay? I'm just trying to raise spirits here.
I know.
Right? It's bright and sunny. No matter where you are, even if it's raining and cloudy outside, it's a sunny day today, all right?
Yeah, we should date stamp the show so people can check the weather. Like they really care. All right, so today's episode is about savings options.
Savings options.
Yeah.
So this is the big HOW, how.
That is right.
We did the why last episode, why to save. We know we're feeling good. We know we're taking care of rainy day stuff. Now this is the HOW.
This is for the grown-ups.
How do we save, baby? Tell me how.
This is for the grown-ups.
For the grown-ups?
Yeah.
Are you a grown-up, Elio?
I don't know. I grew up a lot since the last show.
I have grown tremendously.
Yeah.
Over my time on Earth.
I've lost some hair.
Yeah?
Yeah.
Are you starting to?
It's been that long.
Yeah.
Yeah. I'm going bald, y'all.
I thought it was just for the aesthetics. I thought that's why you kept it short.
Yeah, I come here in makeup.
Yeah.
I do different hair pieces each show.
You do like the little LeBron thing? Where he's
Yeah. I'm
just
going to have a
men.
headband around my my soft spot when I was a baby. I had a headband on as a baby. All right, so we're going to talk about saving options today. Now, why is that important? Well, if this was a depression, all my money would be under my mattress.
Okay.
Right?
Why is that?
Well, that's what people did because the banks were failing.
Okay, it's because I don't trust other people to hold on to it, so I want to have all control.
That's right, dude. I can't be walking around with all my gold in my pouch on my waist with my sword.
But you don't do that? That's what I do all the time. I
know.
All my gold is sitting in my pockets all the time.
Right, so a pocket full of gold with a dagger.
Oh, yeah.
And two swords.
Two swords, one dagger. See, I was kind of a 2 dagger, 1 sword kind of guy. Yeah, you like doing the 2 swords, 1 dagger?
I could imagine people at Easton, 2 swords out, just duking it out outside of Fifth. What is it? Off Fifth?
Off Fifth?
Yeah. Before they went in because he went in with too much gold in his pocket.
What are we talking about?
Well, I'm saying if you had to walk around and you didn't have the options that we're going to talk about.
Okay.
All your money would either be under your mattress
or on your person,
or in a pouch on your waist, and you would see a cashier and you would just throw her a sack of silver.
Here's my bag of nuggets,
and I need a jacket.
Yeah,
and you just walk out.
Hey, I need some new sneakers.
Yeah. She was like, "What's the conversion rate again on silver?"
3 gold pieces. Come on.
Yeah. No, you can't do that. So you have to have options for this.
Okay.
All right. So let's just talk about the basics, okay? We're still in the basics here, folks. You have a little bit of money. You don't want to keep it under your mattress. You don't want gold coins in your pocket. So you go to something called a bank.
Bank.
Now, you would think a lot of people would have access to this option, but unfortunately, there are a lot of people who are considered, in quotes, unbanked.
Okay.
That are using a lot of resources that are very expensive. For example, check cashing places.
Yeah.
Where the fees can be very high. There are a lot of large companies that do very, very well doing check cashing. It is an option for some people who cannot access, we'll call it traditional means of banking.
And so how could people not? What is hindering some people's relationships with banks?
You know what? From the outside looking in, because fortunately I'm not in that situation, a lot of folks who get into trouble with the traditional banking system, like let's say they had an account with a bank or something, and they overdrew that account. Okay. And they didn't have the money to pay it back. Well, at least this is my experience a few years back. You would go into a system I think it's called check systems.
Ooh, I've heard of that. Okay.
You've heard of check systems?
Yeah.
And so if a bank runs a check systems check, and you happen to be in there because you had an account that was closed with a balance unpaid, you might not be able to open a bank account at any other bank.
Okay.
So that might be one reason.
So big number one of how to save is put it in a bank, but if you can't, we have some other options too.
That's right.
Okay.
A lot of times when you go open a bank account, you might need multiple forms of ID.
Okay. You might not have that.
And you might not have multiple forms of ID in order to open a bank account. Some banks might require a minimum balance to get started, right? So you go in, you might have to make a deposit. You might not have that deposit to make, therefore you can't open a bank account.
Okay.
There are a lot of online banking options. A lot of people don't have internet access. I guess you could go to the library, but then you need a debit card with an existing bank that they need to debit the money from. So when you're thinking with a traditional mindset, you might not understand all the obstacles that a lot of folks might have to traditional banking options. But what I'm talking to are individuals who have access to traditional banking options. That's what we're going to talk about on the show. Okay. So the first and most common one is just a checking account. The primary purpose is for ease of transactions.
Okay.
Okay.
Yeah.
So cash is no longer on my person or under my bed. It's in an account that I have easy access to at any point. 24 hours, particularly if you have an ATM card or a debit card, you have access to that money at all times.
Right on.
Okay. That's number one. Now, you might not think of it necessarily as a savings option.
Yeah.
But what's the point of opening a savings account if you're not putting money in it outside of a checking account? You could just have a checking account, spend, I don't know, if your goal is to save 10% of whatever you make or whatever you deposit into that account, you could spend 20% and just leave the excess in the savings account, and that money can accumulate over time.
Okay.
All right? Because here's a rule that I learned from my financial coach. Once the money goes in the savings account, you don't touch it except for a genuine emergency.
Okay.
So I leave excess funds in my checking account for a very, very, very long time.
Okay.
Now, there was a period in time where there was an actual financial disincentive to do that. That's when banks actually paid some interest on savings accounts.
Well, they don't do that anymore?
You remember that?
Hey, I had a person I talked to recently that was getting a really good 0.12% on her savings account.
0.12.
0.12.
0.12.
A tenth of a percent. That was her return on her investment.
A tenth of a percent.
Yep.
What can you do with a tenth of
anything? She had quite a bit of money to sit in there, too. And so it's better, it's a little bit better than the mattress, but interest rates are not where they used to be.
Yeah. Well, that gets wiped out with inflation, which we might talk about on another show.
Just a quick little tidbit. Inflation is give or take around 3%. Goes up and down all over the place, but it's around 3%. It's kind of the average. Mm-hmm. So if you're getting less than 3% in anything that you're sitting in, you're actually losing money. The numbers aren't going down, but the value of what you can actually purchase is going down.
Right. And that's a tricky thing to understand.
And so we'll get into details about that later. But just remember 3%.
It is a tricky thing to actually put your mind around. But once you grasp it, you know that, damn, that is crazy.
Savings account maybe isn't quite as safe as I thought it was.
Yeah.
I'm getting robbed.
That's right.
Yep.
Yeah. And there's a lot of it's a deep conversation to talk about inflation anyway. So just keep the money in the checking.
Okay.
All right.
Checking, savings, but both are still good ways to have it. Much easier than carrying around $4,000 in cash and then whipping out your chains at the bar and then getting mugged and then losing it all.
That's right. So, keep the money in the checking because you know what? Let's say you're out for the day and you're not really paying attention and there's a transaction you don't really account for. So you have $100 in, but you spend $105. Well, if you're in a habit of just kind of letting money sit in your checking account, you avoid another financial pitfall, which is overdraft fees.
Okay.
Right? So we talked about what gets people in trouble with traditional banking is you get an overdraft.
And most of us have done it where you just, you thought the thing hit or, Chipotle didn't actually run your card. And it waited 3 days before it finally hit. Or you bought that swimsuit that didn't hit for 3 or 4 days because it was pending for some reason.
Yeah, your Brazilian Speedo, Travis?
Yeah, it's super Brazilian.
Yeah. I would want to forget that purchase. Yeah, that was.
I'm never going to let you forget it. That's why I'm going to wear it every time we do one of these.
Yeah, so mental image check. Travis in a Brazilian Speedo. All right, so keep the money in the checking. Just build up a balance in your checking. That's a great way to save. It's not costing you anything by not having it in the savings account because your savings account's not paying you any money anyway. But let's say you grow up and you have a couple $100 in checking. Then the next step for you would be to open a savings.
Okay.
Where you start to designate that money for a purpose. Now, the first purpose that you must, at least in my opinion, designate money that's overage from your checking is for a rainy day.
Okay.
All right.
Yeah.
As I said, my financial coach really hammers away. Once that money goes in there, unless I'm having like surgery, but I wouldn't even access it for surgery. Unless my car breaks down or something that prevents me from going to work or something like that, I'm not going to access that money. So that money kind of goes over and stays.
Yeah.
We kind of alluded to the fact that savings accounts are not really paying very much interest, which is another reason why a lot of people don't save, in my opinion. As human beings, we require incentives to do anything.
Yeah.
Okay? It's unfortunate that we won't just do things without incentive, but we're just not built that way.
It's hard, man.
Yeah.
When I buy a burrito, I can taste it right then and there, and I said this was a good choice. But when I put that $6 in a savings account instead, then it's just over there, and I'm still hungry, and
Right.
I don't feel the incentive.
Right. So there's kind of the long-term incentives and short-term incentives, and we need a combination of both.
Okay.
So let's talk about interest rates as a long-term incentive.
Okay.
The reason why your savings account doesn't pay anything is because lending rates at the Fed are so low.
I'm confused completely now.
Okay. So
let's do another episode. We'll dive real deep into interest rates and lending and stuff like that. Is that fair?
All right.
Okay, and we'll do other ways to save on
They
a basic
can't take
level.
it, can they?
I don't know.
They can't take the combo.
We're doing these in like 20-minute segments. I don't know if we can explain everything we want us to explain.
It
in
is
20
July
minutes.
4th. Are you guys up for a Nathan hot dog eating contest? Because I'll give you everything I got right now. No? Okay. I'll take your word, Travis. They can't do it. So let's talk about...
So what are other ways to save? So we got checking,
Other
we got
ways
savings.
to save.
Yeah.
Let's keep going. Okay, so your savings is not going to pay you anything, but it's a good place to keep money that you definitely don't need or not going to need for, unless it's a real emergency. Another way to save is in CDs.
Okay, cool.
Now, these are all what I would describe as short-term savings options. And for me, that's money that can be liquidated within the next 12 months without giant penalties. Okay, so you have short-term CDs, 3 months, 6 months, 12 months. They're not really paying anything right now.
And what is a CD?
Certificate of deposit. And so this is where you enter into a contract with the bank, and you say, I'm not going to take this money out for a certain period of time
3 months, 6 months, 12 months.
in order for
5
them
years,
to
10
feel
years.
comfortable enough to pay you a higher interest rate.
Okay.
Okay.
So we already knew we weren't going to touch that savings anyway. Mm-hmm. This is now signing a paper saying you won't touch it, and now getting a return on your money. So the bank's going to guarantee you some sort of return on your investment.
Yeah, it's a way of trying to get higher interest.
Okay.
But the interest rates on CDs are pretty low right now too.
Okay.
And so that's another option.
Cool.
And then, of course, you have a brokerage account.
Okay. What is a brokerage account?
Brokerage account is kind of a holding account for your investments.
Okay.
So you take money out of a checking or savings, you transfer it into a brokerage, and it's just kind of sitting there waiting for you to tell it what to do in terms of making money.
Okay.
Right. So a brokerage is usually with an investment company. There are a ton of investment companies out there, a ton of brokerage options, but this is money that you can still get to without penalty. Now, the CD, if you wanted to get to it and you broke the contract, there's a penalty there. There's incentive for you to keep it in there. But a brokerage, you can always transfer money in, transfer money out. But the idea is once it goes over to the brokerage, it's really just being held in order for it to be invested to make you more money.
So it's sort of like just another bank account.
It is.
Okay.
It is.
And so investing in a brokerage account, we are specific with, we've talked a lot of kinds of investing, investing in yourself, investing in families and friends and things that you enjoy. This is specifically talking about investing in markets and companies and that sort of thing.
Yeah, equities.
Okay.
So stocks, bonds,
Cool.
things like that. Money market accounts. Money markets are another account option. Usually they pay a little bit more interest. It's based on market rates, but that's getting a little bit too complicated. Again, there's some interest associated with it. Usually money markets, when you start to get into accounts like that, they're going to have minimum balances. Unlike maybe a checking that might not have a minimum balance, or some savings that might not. When you start getting into money markets and CDs and a brokerage account, sometimes they might say, hey, in order to open this type of account, you need to come up with at least $5,000 or $10,000 or something like that.
Right on.
And then, of course, the much often ignored health savings account.
Health savings account. What is this?
Some government regulation law came out to help people be able to afford healthcare. Okay. Healthcare is really expensive, as you know. Now, some people feel more comfortable paying more as a monthly premium to get more benefits on the back end.
Of what? Of an account?
No. So let's say for health insurance.
Yeah.
So let's say your employer offers health insurance.
Okay.
You'll have a couple plan options at open enrollment that are offered to you.
Of like deductibles and weird words like that.
Yeah.
Cool.
Talk to your financial coach.
Yeah, we'll get maybe an episode in here about that at some point.
Yeah, that can get
starting with the basics, okay?
That's right. Talk to a financial coach.
Talk to a financial coach. Talk to financialcoach.com.
Yeah. So we should register that.
We should register. Hey, no one listen to this until we've registered that name.
Yeah.
Talk to a financialcoach.com.
Or buy it for us as a birthday present. I don't know.
Is your birthday coming up? I just had mine.
A while. Oh yeah. Somebody could have gotten that for us. But so you're at your employer. They give you a couple plans.
Okay.
Now there's a plan called a high deductible plan. Usually the monthly cost, your premiums are lower. However, because you pay lower premiums, you get a higher deductible that you have to meet before your insurance kicks in. So a way of meeting that deductible is to put money into an HSA.
HSA is a health savings account.
That's right.
Okay.
And so we were talking about rainy day. Instead of using your rainy day fund in a savings account for health-related emergency situations, if you're properly funding your HSA, that account should help with that. Again, it's not paying very much interest, but one of the benefits of it is that it's tax advantage. So the funds that you put into that account are taken off the top of your overall earnings when you go to file your taxes.
Okay, so is this usually through employers?
Well, you can set up an HSA independent of your employer. What is verified is whether or not you're in a high deductible plan with your employer before you're eligible for an HSA. So you cannot have, I don't know how to properly say this or grammatically correctly say this, a non-high deductible plan.
Yeah, and then also have an HSA.
Yeah, you have to have a high deductible plan to qualify for an HSA, but you can do it with any bank.
Okay.
So those are short-term savings options. These are all things that you can get to within 12 months without an outrageous penalty. CDs might have penalties associated with it, but those are the short-term savings options. This is where you don't have to have your money under a mattress. You don't have to have your bag of gold hanging from your waist with 2 swords.
2 swords and a dagger.
Yeah.
Or if you like me, 2 daggers and a sword.
You like to see somebody's eyeballs when the deed is done, right? That's why you have 2 daggers?
Yeah, I want to be up close. I want to smell the death on them, you know?
Yeah, TMI. All right, so let's talk about long-term savings options, okay? This is, your HSA. You're funding that. You got money left over in your checking. You got some money in savings for a rainy day. That's your emergency fund for short-term stuff. And then you're adding to it because you never know when you might lose your job or get a pay cut or something. So you're trying to build that up. You have some money in your brokerage account for you to do some long-term investing. So now your foundation is covered. Now you're starting to look at long-term investing options. All right. For some of the listeners out there who have kids or are thinking about having kids, another long-term investment fund or thing that you should be thinking about funding is college for your kids. Okay. So this is money that you know that this kid is not going to need to spend for 18, 19 years. Right. So you start to put money in it. I think the simplest one or the least complex one is a 529 plan, which is AKA a college savings plan, where you're putting money in there on behalf of somebody who's going to access it later for college purposes. Now, you can actually invest these in traditional investments like equities, stocks, bonds, etc. Whatever your investment level is, talk to your financial planner. Okay? But this is when you're saving for the long term.
Okay. So we got long-term savings. We're talking about college plans, so different ways to save for our kids to go to college. Or if you start making money and you're young, 15, 16, you want to start putting money away, potentially you can add one of these 2.
That's right. And there are some tax advantages of saving that way as well. Another long-term option is for a home purchase.
Okay.
So let's say you don't want to buy a home for 5-6 years from now. and you need a significant down payment to buy a home. Traditionally, it's 10%. Some people will 20%. There are some options for like veterans loans or FHA, where it's like 3.5%. But it's going to take you a while to save for it. It's more of a long-term savings option. You can do a no risk, which is where you use like a savings account, traditional savings account to save for it. Or you can take a little bit more risk because you want the return on investment, and you can use something like a Roth, which you won't get penalized on your first-time home buyer. You can get money out, talk to your financial planner. Yeah. They can explain that to you more. But that's if you're willing to take a little bit more risk for the potential higher return of trying to get to your home down payment goal a little bit quicker than if you were just putting that money in a savings.
Okay.
It's completely up to your comfort level and your risk tolerance. Another long-term one, which everybody talks about, but nobody does adequately, is saving for retirement, because we're all going to live forever.
Forever. And I feel great now. I can keep working.
You can work forever. You can keep working in the coal mines until you're 110, right?
Oh, yeah. This buy never quits.
Yeah. You never quit. That's right. So the statistics from the Bureau of Labor or Department of Labor, okay, says that only 7% of people who are currently working, right, when they retire will be able to maintain the same living standard as when they were working.
Okay. So retirement means for 93% of the country that you don't have as much of an income as you did before.
You step back in your standard of living.
So
now,
we had a blast, we're having fun, and then now we're retiring, and now we buy a smaller house. We stop going on vacations. We stop eating out as much or at fancier places. Yeah.
Yeah. So now, for some people, that might be a good thing. They might say, I worked all my life. I had these kids to send to school. I needed all this money. Now I'm retired. I don't have these expenses. I'm going to move to Mexico, where the cost of living is much lower. I won't spend as much money, and that's just fine with me. But I don't think that's the truth of what these statistics are trying to tell us. I think what the statistics are trying to tell us is people work their whole lives thinking that this someday thing of retirement is never really going to come. They blink their eyes and they're 65 and they still have to work. Or if they retire, they have to take a dramatic step back. Not of their choosing, however. Not like the couple who moves to Mexico. They're not making a conscious choice. It's an unconscious choice that has real world consequences.
Yeah. Two knee replacements in, you start not being able to walk around, and that suddenly limits your job opportunities by a large amount.
Yeah.
You get retired rather than choosing to retire.
That's right. And so I mean, what I have done personally and what I think works is don't wait to save for retirement. No matter how much you're putting away, be putting something away, right? It's that whole concept of pay yourself first. So of course you want to save for a rainy day. Of course you want to save in your HSA, but alongside that, always be putting money away for retirement. Don't say to yourself, I will save for retirement when I have 3 to 6 months of living expenses. I will save for retirement when my kid's college education is fully funded. You will never save for retirement with that approach. It just won't happen.
And we talked before about saving and just making a habit of it, of just putting some amount, even if it's only 10 cents, even if it's only $1, putting some amount away. No matter what's going on in the rest of your life.
That's right. It's a must. It's not an option. It's a must. And people are living longer than they ever have. Chances are that if you're living right now and you're under 50, you're probably going to live close to 100 years old with the way technology is moving, advancements in cancer care. I mean, there's a ton of money that's going into cancer research right now. Tackling the issue of Alzheimer's and dementia is really becoming a priority for the healthcare field. So who's to say that we won't all live healthy, happy lives until we're 100?
That's crazy.
Yeah, that is insane. And that's only in a matter of a couple generations that it's gone from 65 to potentially 100 for a vast majority of the population.
Yeah. All right, recap for us, baby. What we got?
Okay, so we talked about short-term savings options.
Right on.
We talked checking, traditional savings. We talked CDs, brokerage accounts, and HSAs.
Okay.
We moved into long-term care. Long-term care. That's the next thing I wanted to talk about, but long-term savings,
Okay.
which is college. We talked about saving for a house. We talked about retirements, which you cannot put off. You should be doing right now, and you should be calling a financial advisor to get started if you haven't. And then this is another thing that we kind of put money into. We don't really think that we're putting money into, but it's part of a three-legged stool, which is a retirement strategy, which you're supposed to get some money from pensions, which are completely going away.
Going away.
The second leg of the stool is your 401k, which is what you do on your own. And the third leg of the stool is supposed to be Social Security. Now, when you get your paycheck, you know that's not what your company pays you. Something has come off the top, right?
Yeah.
So you're kind of by default putting money into Social Security and by default putting money into Medicare, which is a huge savings for people who are over the age of 65. Most people, like the statistics showed us, have to take a step back in their lifestyle. If they had to, on top of that, pay 100% of their healthcare costs when they retired, there's just no way that a vast majority of people will be able to have healthcare after they turn 65, which is when we spend most of our money on healthcare anyway. So another long-term means of savings that's being done on your behalf is funding for Medicare and Social Security.
Okay.
Which the doom and gloomers, not really doom and gloomers, the people who are actually looking at the numbers say we'll run out of money by 2033. So Travis, we won't be retired by 2033.
I won't. I mean, I hope I am.
So what do you think about that?
I'm just gonna buy another Brazilian Speedo, man. Let's not think about it.
Brazilian Speedo is your plan. Is your plan for Social Security going away?
I'm gonna just use more money to just distract myself from the negative thoughts and the depressing things about our society.
Okay, so that's Travis's strategy. A whole wardrobe of just Brazilian Speedos and suntan lotion.
I need a lot of that, man.
Yeah.
Irish skin here. I burn like crazy.
Yeah. Okay, we got you. And so, yeah, Medicare and Social Security is another means of long-term savings. And then I was going to say long-term care.
Okay.
Because one of the things that are going to completely eviscerate your long-term savings is healthcare costs in the final 5 to 10 years of your life.
So you got a bunch of money saved up. You did an awesome job. You're in retirement. You're only going off the interest. You're just going off extra. We're not even going down. Our kids are going to have this wonderful inheritance. Then suddenly, boom, stroke, long-term care facility. Can't move half our body. 6 years later, kids get nothing.
Yeah. If you haven't priced the cost of living 1 month in a decent, not even a high end, I'm not talking about like, the most extravagant nursing home here, in a decent one, it is very, very expensive. And so long-term care insurance is a strategy of putting money away for the eventual healthcare costs. It's eventual. It's not like it's something that may happen. If you live long enough, somebody's going to need to help you take care of yourself. Maybe you're not fully dependent on them, but you're going to need some assistance. Okay. And then finally, and this is a hidden one, it's life insurance.
Okay.
It is your final act of generosity, right?
Mm-hmm.
And you pay for that life insurance every month. It's kind of sort of a savings plan, right? For what you would like to leave potentially as an inheritance, not only to take care of your final expenses, but in order to maybe change the financial future of your family. For a lot of people, this is a way of giving a final gift. And it's money that you've been putting away. What you pay into life insurance typically is not equal to what you would reap as a death benefit when you do pass away. And I think it's an awesome way to put away some money and be your final act of giving, whether it be to family or charity. You can designate beneficiaries as you see fit, but it's a great way to put away money. Even though you won't be seeing that money, you can leave some legacy through what you bequeath with your life insurance.
Absolutely. Right on.
Yeah. And so those are your options for saving, man. I think you have a ton of options. It can get complicated. It can get crazy. We covered a lot. However, I think if you do your research, you talk to the right people, you get some advice along the way, I think with these options here, you can do a lot of good, both for yourself, for your family, and for your community.
And we definitely covered a lot of things that are all very complicated in and of themselves. So re-listens if you need to, but pull one of these terms out somewhere and go talk to a licensed financial professional and say, hey, I heard about this. What is it? Is it right for me? And have them walk you through the process.
Yep. This is Monetary Therapy with Elio.
And Travis. Oh, I messed it up.
We messed it up. It's cool, dude. It's early
Later.
in the show. Later. Peace out. All right. Another episode in the bag. And we learned a lot, I think.
I learned so much.
So much, almost overwhelming, but not for the monetary therapians.
We got a little, monetary therapians. we got a little detailed in this one, so we'll have a whole lot of extra episodes, I think, beyond this, getting into real details of what IRAs are and all that kind of stuff. But
that's right.
We got basics.
Coming next week, we're going to talk about the job search, talk about resumes, talk about what you need to do to get you a job.
Later.
Peace.